Bitcoin is going to reach $1 million in less than 5 years. And here are the 5 steps you need to know. Right now, everything we thought about money, markets, and safety is breaking down. Governments are drowning in debt. Inflation continues to inflate, and trillions in capital are searching desperately, I would say, for a real store of value. The ground in our socio-geopolitical market are shaking right now as we speak, having people truly question the ground they walk on, especially when it comes to their finances. We know Wall Street has been pouring billions into Bitcoin. Corporate treasuries are stacking up as well. And now, countries, central banks, and global institutions are racing to get their share of Bitcoin's fixed supply before it's too late. So this isn't just another hype cycle. What's coming is driven by hard math, unstoppable flows, and a once-in-a-generation shift that's happening in real time before our very eyes. Today, I'll break down the 5 real-world steps that are setting up the $1 million breakout. You'll get the numbers, the players who's participating, and exactly what you need to know to stay ahead of the next big wave. So I hope you don't get caught blindsided. By the end of this episode, you'll have the data, the plan, and the conviction to make your move before the market wakes up. Step 1, we're going to take a look at the global debt spiral. This is where the entire story kicks off. Let's cut through the noise. The world's biggest economies are running on borrowed money and borrowed time. This year, US national debt blew past $35 trillion. This is why we've seen Elon Musk so distressed about this, helping out with Doge. That's nearly $11 trillion having been added in just 5 years. The Congressional Budget Office now says we'll cross the $50 trillion mark by 2034. And it goes way beyond America. Global government debt just reached a record of $313 trillion this last year. Every major country is stuck in the same cycle. More debt, more spending, and no politician stepping up to stop it. Here's what Wall Street won't admit. America's debt interest is now over $1 trillion a year. That's bigger than the military budget. Soon, interest payments will eat up even more than what the US spends on defense, Medicare, or education. Europe and Japan are facing the same math dilemma. Japan's debt to GDP is above 250%. The European Union's total debt is over $16 trillion. Arthur Hayes describes this as the doom loop. When rates rise, governments struggle to cover the interest. When rates fall, inflation flares up with nowhere left to turn. Governments rely on printing money. Look back at 2020. The Federal Reserve added $4 trillion to its balance sheet in under a year. The US money supply shot up by 25% in just 12 months. That's the fastest surge since World War II. From 2023 to 2025, the story keeps repeating itself. Every time something breaks, like a failing bank or a shaking bond market, central banks react by cutting rates and injecting more cash into the system. The Bank of Japan's assets now total nearly double its GDP. The European Central Bank tried to tighten, but quickly reversed course and started adding liquidity again. Central banks aren't alone either. In 2024, the US Treasury issued $1.5 trillion in debt. And at the same time, foreign demand for US treasuries are dropping off. China and Japan have quietly sold nearly $400 trillion in the last year. So where does this all lead us? When the world's safest asset starts losing its shine, global capital starts searching for something solid, something else. The early signs are showing up. Gold just broke out to new highs above $2,400 an ounce. Investors everywhere want safety, but the printing press keeps moving the goalpost. Only one asset stands apart from all of that. Arthur Hayes and Michael Saylor see where this is heading. Every round of crisis, every government rescue, Every shock to the system leads to more money in circulation and a bigger search for something that holds its value. More capital asks the real question: where can you store wealth when it can't be printed away or seized? In 2025, all signs pointed to a massive shift in how wealth is protected. There's no need for drama or doom. This is just the math playing out in real time. Step 2. The institutional floodgates open. Here's how it unfolds. We're witnessing a shift that's rewriting global finance. In 2024 and 2025, this year, institutions finally moved real money into Bitcoin at a pace nobody predicted. This year alone, the US spot Bitcoin ETFs they've drawn in over $15 billion in inflows. BlackRock's iShares Bitcoin Trust soared past $18 billion in assets within 6 months. And Fidelity's Bitcoin Fund has crossed past $10 billion almost overnight. Today, all Bitcoin ETFs together hold over 1 million Bitcoin, about 5% of the total supply. This isn't retail hype. Pension funds, endowments, insurance giants, and family offices are all allocating. In 2024, Nickel Digital Survey found 56% of institutional investors in North America and Europe already hold Bitcoin or plan to within a year. It's becoming standard for asset managers to allocate 1% to 5% of portfolios into Bitcoin. Even JP Morgan, once a skeptic, now runs a digital asset desk and offers Bitcoin access to its top clients. Hedge funds are calling Bitcoin a core position for the next cycle. ARK Invest projects that if institutions move even 2.5% of their portfolio into Bitcoin over 5 years, prices could surge to hundreds of thousands of dollars per Bitcoin by 2023. Norway's $1.5 trillion pension fund, Switzerland's central bank, and the Texas state teacher retirement system all made their first Bitcoin moves this year in 2025. Globally, institutional investors control over $100 trillion. Even a portion flowing to Bitcoin will have an enormous impact. Momentum is here, guys. The biggest asset managers are buying and holding for the long term. Strategy: set the pace. Amassing over 1% of Bitcoin, over 500,000 Bitcoin on its balance sheet. Square and Tesla have followed, sending a message loud and clear. Bitcoin has now become a strategic asset for the forward thinking, the visionaries. Institutional adoption isn't just a headline. It's a movement reshaping how the world's biggest players protect and grow their capital. Now, let's take a look at step 3, the nation-state Bitcoin rush. Here's where things accelerate. After the corporate wave, a much bigger force is now at play. Countries, central banks, and government leaders are actively moving to accumulate more Bitcoin. This new demand stands to eclipse anything Wall Street or public companies have done before. Bitcoin is becoming a building block for the next era of global finance. In 2021, El Salvador made Bitcoin legal tender and now holds over 5,750 Bitcoin, worth more than 360 million at recent prices. In 2024, Bitcoin outperformed every other asset in their treasury. Leaders in Paraguay, Argentina, and Gulf states have all discussed holding Bitcoin as a strategic reserve to hedge against dollar risk and inflation. And across Asia and Europe, central banks are studying Bitcoin and digital assets for their reserves. The Swiss National Bank began a full review of digital currencies this year, 2025. The US Strategic Bitcoin Reserve is already in motion, with policymakers working on creative approaches to accumulation without using taxpayer money. As more nation states join the race, the pool of available Bitcoin keeps tightening. For countries building reserves, the challenge isn't just buying, it's finding enough willing sellers as more holders lock up the supply for long term. Geopolitics is shifting fast as well. In 2025, the US dollar's share of global reserves dropped below 58%, the lowest it's been in decades. China and Russia are settling more trade in their own currency, and oil exporters are looking for new reserve assets. In this kind of an environment, Bitcoin is emerging as a neutral, borderless alternative that any country can access instantly. This is now a scramble for financial security and global influence. When nations compete for a fixed supply of something, price discovery speeds up dramatically. Michael Saylor sums it up. You want to get your Bitcoin before there's none left for you. The digital gold rush is here, and competition is only heating up. Let's take a look at step 4 now, the systemic crisis, the macro cannonball. Here's what's really happening. The global financial system is running hot, and every pressure point is showing cracks. By early this year, government debt has hit an all-time high of $313 trillion. The world's top 3 central banks, the Fed, the ECB, and the Bank of Japan, now hold over $25 trillion on their balance sheet. Emergency liquidity programs are the new normal, and the IMF calls today's debt levels uncharted territory. Every major crisis in the last 2 years, bank failures, sovereign debt scares, and market meltdowns have triggered new waves of rate cuts and liquidity injections. The Bank of Japan owns more than 53% of its own bond market. The ECB restarted bond buying for Italy and France, and the US Treasury keeps rolling record deficits at higher interest rates. Meanwhile, foreign investors cut over $400 billion from their US Treasury holdings in 2024. China and Japan have accelerated their selling as rates and geopolitical risks climb. Inflation remains sticky across the developed world. In the US, the CPI rose 3.3% over year to year by this last May of 2025. Core inflation still runs above 3%, and the Eurozone core is near 2.8%. The UK and Germany saw food price inflation above 5% for months. Housing costs in America has hit record highs, and with rent up 20% since 2020 in cities like New York and Miami. Energy prices have surged over 15% this last year. Real wages barely moved either. In some parts of Europe, they even fell. Political risk is high and keeps fueling uncertainty. Leadership changes, new fiscal policies, and shifting trade alliances create ripple effects across global markets. Capital controls are rising too. In 2025, Argentina tightened foreign exchange restrictions. Nigeria is limiting outbound transfers. Lebanon froze billions in deposits. China is imposing new requirements on moving money abroad, and each new barrier sends capital searching for exits. Investors everywhere are learning how quickly money rules can change. Bank accounts get frozen, money can lose value overnight, and in 2024 last year, over 300 billion in Russian reserves were blocked. Central banks worldwide took notice of this. Old trust is fading. Backup plans are the new rule. It's code, not politics, keeps the network running. Wallets stay open. No one can print new Bitcoins or freeze your balance. The supply schedule is set forever. Bitcoin is the only global asset that works the same every day, no matter what's happening in the world. Arthur Hayes and Balaji call this coming phase a melt up. Trillions can move fast, escaping weakened currencies and capital controls, always looking for safety. When confidence breaks, Bitcoin's price can surge in massive waves. In the 2023 banking crisis, Bitcoin jumped 40% in 2 weeks. Every shock to the system brings new capital into Bitcoin and sets a higher floor. The macro cannonball is already rolling too. Governments, institutions, and everyday savers face a simple choice: stick with a risky system or secure their future in something built for long-term protection. For the next 5 years, the logic is simple. Money always seeks safety. Today, safety means scarcity, transparency, and true independence from government interference. Bitcoin is the answer. Step 5, the inevitable supply squeeze, and why 1 million makes sense. So this is the final piece of the puzzle. Bitcoin's path to $1 million sounds wild to most at first, I know. But when you lay out the numbers, the story becomes much clearer. Look at the global landscape, for instance. Bitcoin's market cap stands near $1.3 trillion today, and gold is valued at about $14 trillion. Global bonds, real estate, and cash together are above $400 trillion. Big investors are only beginning to step in. Spot Bitcoin ETFs just crossed 50 billion in total assets. Compared to traditional markets, that's still a tiny little fraction. BlackRock and Fidelity's funds each took in over $15 billion in only 6 months, landing among the fastest growing ETFs ever. These early moves show where the momentum is heading. Institutional investors, pension funds, insurance companies, sovereign wealth funds, they all control around $100 trillion globally. And even a small shift makes a massive impact. If just 2.5% of those portfolio flows into Bitcoin, that means 2.5 trillion in new demand. This level of buying power can push Bitcoin's price far beyond old highs. Nation states are also starting to act. El Salvador is holding Bitcoin as part of its reserve, and the US is developing its own strategic Bitcoin reserve. Central banks and governments have joined the competition for the world's most finite digital asset. As you remember from step 3, the pool of available Bitcoin is tighter than ever. Now here's the hard math that sets Bitcoin apart from anything else on Earth. There will only ever be, for instance, 21 million Bitcoin. Over 93% of these have already been mined. So by 2030, more than 99% will be in circulation. And after that, the only way to get a significant amount of Bitcoin is to buy it from somebody else, from an existing holder. The 2024 Bitcoin halving dropped daily new supply to just 450 Bitcoin. So by 2028, this number will drop again, and it will drop to only 225 Bitcoin being created or mined per day. At the same time, long-term holders keep locking up their Bitcoins, and more is going into cold storage than ever before. Glassnode data shows nearly 70% of all Bitcoin is considered illiquid supply, meaning these are coins that rarely move and are basically off the market. So here's how the $1 million Bitcoin number adds up. Right now, global wealth across the bond, stocks, and real estate sectors and cash are over, together, $400 trillion. If just a tiny portion of that, say 5%, migrates into Bitcoin as investors look for safety and long-term stores of value, you get a $20 trillion Bitcoin market cap. With only 21 million Bitcoins to go around ever, that's about $1 million per Bitcoin. Every past bull run follows the same pattern. New supply shrinks after each halving. New buyers, retail, institutional, and now sovereign, step in. The price jumps higher, and the floor, or the lowest price for Bitcoin on the chart, rises with it. The trend is picking up as more players seek security, scarcity, and independence from old systems. Momentum is building, guys. The numbers show how quickly Bitcoin can move when demand floods in. The last bull run saw a tripling down from 20,000 to 60,000 in just 5 months. Today, there's more and more capital watching, more institutions positioning, and the supply side has never been tighter. The window for positioning ahead of the next big move is open, and it won't stay open for long. Now, let's pull it all together. So in closing, let's recap what's really setting the stage for Bitcoin's next giant leap. Step 1, the global debt spiral keeps growing, forcing governments to print more and more money. Step 2, Wall Street and major institutions are flooding in, turning Bitcoin from a fringe idea into a global financial staple. Step 3, nation states, central banks, and governments are jumping in, building reserves and adding pressure to the limited supply. Step 4, systemic risks and global shocks are driving a wave of capital out of the old system and straight into Bitcoin. And finally, step 5, the supply squeeze is real. New demand is running up against a fixed cap, and the math for 1 million Bitcoin is lining up faster than most people expect. The opportunity is right here and right now. The smartest investors, institutions, and even governments are taking action. Every signal, every shift in capital, and every data point says the same thing. Those who move early and stay convicted stand to benefit the most. So if you want to thrive in this new era, start thinking bigger, do your own research, and keep your focus on the long term. Momentum is building, and history only rewards those who act before everyone else wakes up. So guys, that's a wrap for today's video. If you gained value from today's video or can now understand Bitcoin's long-term, I would say almost intrinsic value up to $1 million, then please like the video and share it with somebody whom you hope will make a wise investment decision and move at least a percentage of their holdings into Bitcoin. Because now is the time. We see it in news headlines, we see it everywhere. Times are changing, they're scary, they're uncertain. And the only asset on the planet that is not tied to a government is Bitcoin. And that's why I hope you continue to buy and are definitely at least holding your value, your savings, your future retirement money in Bitcoin. I love you guys so much. This is a wrap for this week. I'll catch you guys on Monday. Have a wonderful weekend and take care, guys. Ciao.